Okay. First, regarding your tax exam. Okay, tax law, they change every now and then. Alright, so that's why every time when you look at your past year paper, you will be extra careful with the older set of questions. Okay, because the answers that we gave you here is obviously the official Q&A. Then the answers are correct that time. Okay, like for example, you look at December 07, the law is correct in 07, but come to today, some of those things could have changed. For example, like relief, tax rate. So when you all do that time, you got to be extra careful. Okay, now we will go through quite a number of questions during the tutorial. So then later when you check the answer, you will see some parts are quite different, but we can't do all of it. Alright, so for those that you do on your own practice, if you see anything not so right, like for example when you learn, you say, hey, I learned this got double deduction, then I look at this don't have. Now then probably it's because the law changed already. You can confirm with your note, you can confirm with me, but please don't always assume that you're right and the question is wrong. Okay, because I scared you all that must be question law wrong already. Okay, no, so be extra careful on that. Now you will be given the tax rate table in the exam. The rates that they're going to use is this one. Okay, but of course this is not what you're going to get, because this rates is for P6 exam. They only publish one rates in the website, so in the P6 one there are only additional things that you don't have. Okay, but you're going to use this rate. As you can see, the tax rate has changed. Okay, now they have this 2050, next 5000, because they very lazy to do the whole table again. That's why they do like that. Okay, so by right they should just put 5000, that's all. Okay, so but anyway, it doesn't matter, that does not affect us. Alright, now then your exam structure is going to be in this way. Now your question 1 and question 2 can be any one. Okay, personal as well as corporate tax. So the nearest that you can see is you just take a look at the last set, which is the last exam, page 115. Just turn to the last set, page 115. Okay, the page number is at the bottom right hand side. You can see it, page 115, spits. Now that is the last exam question set by your new examiner. This is the first paper he set. Okay, that means coming exam you're going to be the second paper that he's going to set. Now by right, question 1 is 30 marks, question 2 is 25 marks. Okay, by right is 30, 25. Obviously he made a mistake here. Okay, he made a mistake here, first time so it doesn't, anyway it doesn't matter. So he has a 25 marks for question 1, and he made question 2 the corporate tax, which carried 30 marks. Okay, but still the total mark is not affected. Now then you can see question 3, 20, question 4, 15, question 5 is 10. Now the marks are fixed, but the areas are not fixed. Okay, the areas which are fixed are only question 1 and question 2, which is to do with personal tax and corporate tax. Only these 2 areas are fixed. The other 3 areas, they are not fixed. It can come from any area. So we can see like what examiner has tested in question 3 is examiner has asked a question on CA. Okay, question 3 is about calculating CA and IBA. And then question 4, examiner asks issue about real property gains tax, RPGT. Now question 5, examiner asks indirect tax. Now indirect tax is something that we have not covered, it's towards the end. Okay, now although the area is not fixed, but in the syllabus, indirect tax question is compulsory. That means you surely gonna get a question on indirect tax. It can be in any of the question, whether it's 3, 4 or 5, it doesn't matter, but definitely you will get indirect tax, and minimum will always be 10 marks. Now minimum 10 marks. So it's not exactly 10 marks, it can be more than 10 marks, okay? But so far we can see examiner being quite consistent, that he's just testing about 10 marks over here. Follow? Okay, so the next thing is I need you all to know is the exam sitting with the change of examiner, because this tax examiner, when they change the style also, they change very much. Now, so what happened is, right, page 1 all the way to page 65, it was by the first examiner, okay? So that's Puan Sharina, alright? So Puan Sharina. Now then from page 66 all the way to the one that we just see earlier, now that is Mildred's exam. And then page 115 is Mr. Ravi. So that's your current examiner. Now I let you all know is because when you do the paper, you notice the style is very different, okay? That you should focus more on the current examiner style. Now I find Sharina's style is better and closer to Ravi. Mildred's style is very wide scope and very hard to predict what she wants, and you see that her paper is very different. One sitting, then another sitting completely change. So I would think that okay lah, you can practice, but focus on Ravi and Sharina's question. Okay, now so let's start with this. Now we look at more on question 1 and question 2. Okay, now maybe we can turn to page 36. Okay, June 09. Let's look at page 36. Follow? Now, so that's an example of a corporate tax question. Now, you always get a corporate tax question that the style is like this: a profit statement with notes and a lot of elaboration. Okay, please start with the requirement. Right, what they want you all to do is A, compute the chargeable income. So they only ask for chargeable income, don't have to work out the tax. The student very strange one. They don't read requirement in the exam. Because when we do marking, we know. They just calculate everything all the way to the end. Sometimes you don't see what the question asks. Sometimes examiner only ask compute until total income only. Don't even need to show relief, but the student will still calculate. Okay, so please read carefully. Now they only want you to work out the chargeable income. Now your computation should start with profit before tax figure. So you always start with profit before tax. You follow description used in the note, and you indicate nil in the appropriate column for item that does not require adjustment. So anything that you believe you do not need to adjust in the answer, you must put the word nil, and the nil must appear in the right column. Okay, then after that, the examiner asks us to explain your treatment for all the 5 items. Which items that you read later, you come back and explain. Then they say that there are 2 alternative treatments available for expenditure incurred for provision of library facilities. So what are the 2 treatments? Okay, we come to this later. Right, let's start with the question. Now, Taiji submits profit and loss account for his business of manufacturing soft drink, mineral water for year ended 31st December 2008. Okay, so run through the P&L, look for anything that there's no note and ask if you need to adjust them. Okay, what do you see here? Loss on the sale of a car. Now you're selling off a vehicle, correct? No? So this loss is what loss? Loss on sale of asset is what loss? Huh? It's disposal loss or what? Huh? Balancing? Allowance? My goodness, hello. What are you all doing? Hey, I'm asking a very common question, simple thing. When you make a loss on selling fixed asset, what loss is that? It's a capital loss. Say lo. You're mumbling, okay? Now, balancing allowance is what you do later, okay? But now we are talking about what loss is this? It's a capital loss, right? So you allow this loss? No, right? So you add that, right? Okay, depreciation, you allow or not? No, you must add back. Audit fee? Yes. So these 3 you adjust first. Now the rest all come with no. Okay, can we just put up the space? Tax computation is Y08, but I will stick to the present law. Notes per question, description, then you plus minus. Okay, right. So the profit before tax is 29. Okay, the loss on sale of the car 9,000. Depreciation 708. Now see, audit fees, you say it's allowable. So what's your adjustment? Nil in the plus or minus? Plus, because you don't have to add back, right? Okay. Okay. So after you start with this, then you can start concentrating on the note. Follow on. Now, so the question say that this profit statement does not include the results for the business in note 9. That means you be careful later. So I think in the exam, you better put a note so that when you do that time, you will not miss out. Okay? You just bring a few highlighter different color so that you remind yourself. Okay? So that later on, when we come to note 9, you will not forget that there's something about the note. Okay? Alright, carry on. Okay, note 1. The sales include 460,000 in respect of mineral water supplied to a company in China for Beijing Olympic Games. What is this business doing? What is Taiji doing? Taiji sells drinks and mineral water, right? Correct enough? That means this mineral water is their product, and now the business exports the product to China. So now the question is, the 460,000 that you sell to China, do you need to tax? Tax or you don't need to tax? Yes or no? Logic and see, logic. Logic is, do you think you need to pay tax on the goods you export overseas? Yes, right? You make a profit out of your product, yes or not? Now, so this is taxable. And why is it taxable? Remember which part of the law? No? At the end of the day, you want to know whether you really understand something or not. And besides saying yes or no, you ask yourself why. If you cannot answer why, means you are guessing already. That means you tired. Oh, can. Why? Don't know. Feeling. Feeling is very dangerous in the exam. Okay. Now the reason why we need to tax this is because in the law they say that any products that you produce, assemble, grow, harvested, mine in Malaysia, the moment you sell it outside Malaysia, they are all deemed to be Malaysia derived. It's in the law. Okay. When we do business income, we discussed that before. Now that's why this is taxable in Malaysia, because you produce them in Malaysia. Follow? Right. So note 1. The sales of water to China. New. Okay, then note 2. Now, closing stocks after deducting a reserve of 15% in each case, where 775,000 is at 31st December 08 and 690,000 is at 31st December 07. Okay, what is today's year end? December 08, right? That means this is your closing stock, am I right? And this is your opening stock. Okay, now they say that the stock figure is after deducting a reserve. Now this is another thing that examiner tries to do. To examiner, every sitting they set a question. They feel very boring to use the same word again and again. Every time say provision. Then examiner, very boring. So she wanted to use a different word but refer to the same thing, because what reserve can it be? You think and see. So that's why this reserve actually is provision. She's just making an allowance or a provision for inventory. Okay, she's making allowance or provision for inventory. Okay, so now based on this thing, you try for me, work out your adjustment. What goes into your answer? So I help you with some clue. If you find it difficult, then you do it one by one. Now, the reserve or the provision for inventory for your opening stock and the reserve for your closing stock. Now you do one by one. First, you ask yourself, how much is the provision? And then you ask yourself, what is the adjustment? Okay, you fill in the blank. Okay, what's the provision figure for opening stock? The provision is based on now 690,000 is the value of the opening stock after provision, right now? So I want the amount of the provision. That means I must work backwards. So I divide back with 0.85 times 0.15. So the amount is 121765. 121765. Okay. So this is the provision for my opening stock. Now I just write here 121765. That's my provision. Okay. What's my provision for closing stock then? 775,000. You divide with 0.85 times with 0.15 also. Now we get 131765 also. Okay, 131765. Okay, now when you provide something, agree? When you provide something, is an expense or is an income? Expense, right? So when you made a provision to your closing stock figure, then obviously your closing stock figure is getting smaller, right? You think logically, closing stock figure gets smaller. So when your closing stock figure gets smaller, your profit go up or go down? Go down, right? That's why it's an expense, right? Not? Now, so now I tell you that, is this allowed or not allowed? Not allowed, right? So what do? You add back, no? So that's why the provision that you've made for your closing stock, you have to add back 136.765. I mean, if you think like that one by one, it's probably easier for you to resolve how to do this kind of question. Okay. Now, obviously, if you have a provision for closing stock, you got to add it back. Then the provision for the opening stock, you will have to minus it out, right? Because it's the balik. So one is in, one is out, you see. So that's why this one is the figure on top. So 121765. Okay. Now, of course, if you have done a net figure in total, you would have got plus 15,000. It doesn't matter how you do. So end of the day, as long as your answer is correct, we will mark you correct. Follow? Okay, this is the issue to do with provision. Now, so that's on the inventory. Okay, note 3. Okay, remuneration includes the salary of registered blind employee amounting to 90. Now, you're very good in this. Salary to blind employee, what do you get? Double deduction. See, correct, right? Very good, right? Salary to blind employees. So what do? You minus again 90. Okay, number 4. Now, employees' provident funds contribution include 63,000 in respect of remuneration of the managing directors amounting to 300. Okay, what's the issue here? What's the issue here? You contributed EPF on the director's pay, correct or not? Now director's pay is how much? Director's pay is how much? 300,000. And how many percent can you claim as deduction when you contribute EPF? 19, right? Is the 63,000 more than the 19? How do you know? Well, just calculate and see. If I take 19% of 300, you get 57, right? Right, so in this case, your EPF 63,000 is the actual. The most you can claim is 19% of the 300. So now there is an excess of 6,000 you must add back. Understand? So read and see what they say lah. Alright, now note 5. Now it says that entertainment is in respect of a dinner provided by Taiji Sdn Bhd to its supplier. But some of the employees attended the dinner. So what entertainment is this? Suppliers entertainment or employees entertainment? Supplier, right? But mainly is for supplier. So employee is just a few only. Okay, suppliers entertainment, what's the rule? How much deduction do you get? 50, right? So you only get 50, you must add back the balance. So suppliers entertainment, 50% of 8,000, so you add back 4. Okay, note 6. Right, staff welfare. Now the monthly broadband subscription registered in the name of Taiji as a gift to the employee amounting to 7,000 ringgit. Now, providing gift to employee is just part of your remuneration cost or staff cost. So nothing special about broadband. So the broadband subscription fees, you can claim deduction. It's just part of staff cost. The only thing that you give to staff and you cannot claim is what? Computer. Computer you cannot because the law expired. And the other one is what? Leave passage. These are those things which is restricted. Other than that, all can claim. Right, note 2, child care center. Now in March 2008, Taiji purchased a building to provide child care facility for its worker. And Taiji incurred 190,000 on the purchase of the building and 22,000 on the maintenance of the premise. So what's the issue do we have here? First, there are two things that they mentioned. They spent 190,000 to purchase the building, and they spent 22,000 to maintain the center. Correct or not? Okay. Inside the P&L, is the 190 inside or not in? Is it in or is it not in? The cost of purchasing building. Now, I mean, if you do accounts, technically, you won't charge 190,000 into the account, right? It's a property, correct? No? But you must understand you're doing a tax paper. Right? The examiner don't follow accounting rules. Right? How do you know that this figure is in or not in? You must look at the P&L. The question says 219,000 comprises. That means 219. 219 comprise of what? 7, 190, 22. So is the 190 inside? Yes, I mean in account this is ridiculous, right? It's wrong already. Where got you put 190 in the P&L, okay? But in this case, you don't care lah. You know this is what? Building. So the cost is what? Revenue or capital? Capital. So you must add back, right? Okay. Then number 2, buy building for childcare. What you will get? You're gonna get industrial building allowance. So later you will check. Do I need to do IBA adjustment or not? I don't know. You must read until the end, then you decide. Okay. But when you read the question, you must tell yourself, okay, when you come to IBA later, watch out. So the 190 you add back. Cost of the childcare center premise, the 190 must add back. Okay. Then number 2 as well. Cost to maintain the childcare center. What do you do when you have cost of maintaining childcare center? Anything special? Cost of maintaining childcare center, you get double deduction, correct or not? So there's a new double deduction given for what? Childcare allowance and childcare center. So in this case, you minus 22. You see the answer, it will not be double deduction. Okay, that's why this is the change in the law. Alright, note 7. Okay, advertising includes the sum of 48,000 incurred on international standardization activities, and the participation was approved by Department of Standard. Now, international standardization activities is allowed by section 34. That's it. It's just a 34 deduction. So the participation in international standardization activities, nil. Note 2. Now you contribute to library facilities which are open to public. What's the treatment? Section 34 allowed deduction up to 100,000, right? Can you not? So contribution to library maximum is 100,000. So 29 must add back at the end. Okay, so there's note 7. Okay, note 8. Rental. Now they say the rental of 120,000 is in respect of a building in Hong Kong. The building is in Hong Kong. That means this rental is foreign or Malaysia? Foreign, yeah. But the whole amount was remitted, so exempted, correct. Okay, amount they remit become exempted. But anyway, right now what do you do with the rental? You take it out, right? Because the rental falls into section 4D, correct enough? So that's why in this case the rental, I minus out 120. Okay, so you take out the rental. Okay, alright, now note 8 done. Okay, can we turn to the back? Okay, they say Taiji also has a second business of trading in cartons. Now this is business number 2. Now the records of business for the second business for 31st December 08 show the following. Adjusted income for the year ended is 17,000. Unabsorbed adjusted loss at the beginning of the year is 22,000. Unabsorbed CA at the beginning of the year is 2005. Capital allowance for year of assessment 2008 is 1,005. And they clearly say that is excluding the van you purchase, see other information, note 2. So now you better read up what is other information. Okay? Now, so other information. In respect of business 1, the capital allowance for Y 2008 is 999,000, excluding asset acquired and disposed of during 2008 as follows. A model car bought in May 2006 at a cost of 136,000, which was sold for 31,280 in September 08. Now, although Taiji claimed annual allowance for Y06, it did not claim allowance for Y07. Okay, so the question said that it did not claim allowance for Y07. Now you have to work out the BA, BC. Okay, what's the BA, BC? Now in March 2008, Taiji purchased a van cost 60,000, and the van used 50% for business 1 and 50% for business 2. So there's a sharing of the usage that you will have to apportion as well when it comes to the CA. Okay? Alright, now the issues that we're going to have here is, when we read the question just now, we remembered something about the 190,000 that you spend to buy a house. So this 190,000 that you spend to buy a house, will you put them as part of your calculation of CA? What do you think? You read back the notes and then you tell me. Do you think that the 190,000 should goes into your answer, or you ignore it? Calculate or you ignore from the question. You just use your understanding. You don't have to feel very difficult. You just feel like, do you think that whatever they explain here on the other information is expecting the student to calculate the 190,000 or to ignore the 190,000? Wow. In the exam question, then how? So long you all think? PowerPoint, do I need to calculate the 190,000, or do I don't need to calculate the 190,000? You need to calculate. Calculate. Safety. You simply do like that. Then inside the figure got already, then you calculate double claim more. That they call safe. They call luan lai. Safe. Included or not included? Now you read the question again. They say that in respect of business number 1, the CA for year of assessment 2008 amounted to 999,000, which excluding asset acquired and disposed during 2008 as follows. So they say is excluding asset acquired and disposed. Correct or not? Which is as follow. That means you need to say only these two that you excluded, you know. Then the rest, then I assume the rest is included, you know. When you read, it's like that. Now, of course, if you look at the examiner's official answer, the examiner also calculated the IDA. Okay? And then what the examiner said in that particular round is examiner said, but I mentioned CA only. Examiner said, I never say it's IDA. So that's her argument. Can say not? But I must also explain to you, the question is very, very unclear. That means you ask like that, you're trying to catch people with the word, like you're trying to trick the student, okay? And technically in the law, the word CA doesn't exist. That means if you want to argue like that, your answer is also wrong already, because the question is wrong. There's no such thing called CA. Now in the law there's IBA, but there's no CA one. You cannot find the word capital allowance. They don't have. Okay, so that's why in that case, this is an issue that the question become doubtful. So we accept both answers. You calculate also we accept. You don't calculate also we accept. Because you know. So this is the problem with tax. So sometimes when you just look at the Q&A, you don't know one. Because but after explaining it, oh okay, this is what happened at the back. Follow, okay? Now, so that's the issue here, because the question itself mentioned that the CA is excluding asset you buy dispose as follow only. That I will presume this is considered. Follow? Now, so I will follow my interpretation, okay? Because that's what I understand from the question, that you only mentioned this one don't have. Okay, so we're going to cast the figure now. If you read anything in the exam and you're very doubtful and you feel very scared, not very sure, I suggest you just write down your concern as an assumption. Okay, you just say the question said that this is excluding, so I assume that when we read, then it's better for you. Okay, right? 232 is what you might. Sorry, I forgot to put the 121765. Okay, 353,765. $3982.765. Okay. So after minusing the figure, we get 3629, which is your adjusted income. Okay. Now once you come to your adjusted income, then you will minus your capital allowance. Correct enough? So you're going to minus your capital allowance. Okay, so how much is your capital allowance? I'm going to show in workings. Okay, the CA. Now the first thing that we have, there's a disposal. Okay. Disposal of car. Okay. There's a disposal of car. Now this car that you dispose in September 2008, you dispose it for 31,280. Alright, so the disposal value is 31,280. Now this 31,280, do you need to do any adjustment, or do you straight away take 31,280? It's a car. So what's wrong with the car? You're going to restrict the qualifying plant expenditure, correct enough? Now we restrict the qualifying plant expenditure, you're going to restrict the disposal value. So how much do you restrict the disposal value? How much? Then there's another issue you see here, right? They only mention the car you bought in May 06 for 136,000. Did they say it's a new car or a used car? No. Now if you didn't say it's a new car or a used car, then again you have doubts already, right? If it's a new car, then you take 100. If it's a used car, then you take 50. So the issue now is it a new car or a used car? See, that is another thing that I want you all to understand, that this is exam. In exam, that you don't expect everything is perfect one. So when you see something, then how? Then assume. That's the only choice you can do. You just make an assumption, because now. So in this case, I just assume that this is a new car. Okay. So if I assume that this is a new car, it will be based on 100,000 divided by 136. So the adjusted disposal value is 23,000. Okay, you will have to then take this disposal value minus with the residual expenditure, which starts with qualifying plant expenditure, that we assume that car is new, so the maximum is 100,000. Okay, the maximum is 100,000. Okay, calculate for me the RE. That means you will have to show how much allowances you're going to claim, or how much allowances you're going to deduct, then you get the RE. Calculate for me the RE. So how much is RE? Now they say that although Taiji claimed AA in YA06, it did not claim allowance in 07. Now you buy the car in Y06, right? Am I right? That's the first year. Now the question say that Taiji claimed AA in Y06. Then you tell me, then do I need to deduct the IA? Huh? Deduct or not? The question say what? Taiji claim annual allowance for Y06. So initial, don't need. Because the question say only claim AA. So now I ask you, can you claim AA without claim IA? Can or not? Can. How can? You show me a situation that in the first year you can claim AA but there's no IA one. You show me. Gone. First year. In the first year, got AA, no IA one. Gone. Where gone? You can only have IA, no AA. That's in IBA only. Correct now? You either have IA and AA. No IA means there's no AA already. You cannot claim IA, where can claim AA? Correct now? So it's understanding, right? That's the principle. So in that case, when I say AA is claimed, then understood IA must be claimed. You cannot claim AA without IA, right? So this is the issue with C for Y06. Now Y07, they say they did not claim allowance. Did not claim allowance, then do I need to show anything? Notional. Now Y2008 you dispose. So the RE is 40,000. So we have a balancing what? Charge. Balancing allowance 17. Okay, so sorry, forgot there's a disposal. I change this to balancing allowance 17. Okay. Alright, now we look at the CA for the current year. Now what's the CA we have for the assets? Which assets that we are having? The assets that we are having is the new van that you purchased, right? Now they say that they buy a van for 60,000. So we assume that van is commercial, okay? Now, so there's a new van. Let's assume that van is commercial, so that your qualifying plant expenditure is 60,000. So initial allowance is 20 of the 60, so it's 12. Annual allowance is 20 of the 60, so it's 12. So RE is 36. The total CA is 24 for Y08. Okay, now so for business 1, the CA will be 999 plus 50% of 24. Okay, so it's 12. Now that's 1011. So again, the capital allowance is 1011. So the statutory income is 3629 minus BA and CA, so we get 2601. Okay. Alright, now after your business 1, you're gonna get your business 2. Now in business 2, they mentioned that the adjusted income is 17,000. Alright, adjusted income is 17,000. Now they say the business has an unabsorbed CA. Okay, so unabsorbed CA brought forward is 1,005, and then the current year CA is how much? Okay, unabsorbed is 2,005, I'm sorry. Current year CA is 1,005 plus just now got 50% of 24, right? This comes from working 1. So 13,005. So you're left with 1,000. So aggregate business statutory income is 2602. Now any unabsorbed business loss? See, if you see note 9, they mention the unabsorbed business loss is 22,000. So that's where you minus, right? Unabsorbed business loss brought forward 22,000. So this is the net aggregate business SI 2580. Okay. Now, so after you finish off with business SI, what comes next? The investment income, correct or not? And investment income in this case would be, which income is that? Rental, right? There's a foreign rental, correct or not? Now this foreign rental is tax exempt, am I right? Okay, so your 4D rental is tax exempt, so nil. So what do you get after that? Aggregate. Now what do you do after aggregate? Donation? No. Before that, current year business loss. You got or not? You must check. Got or not? Now of course in the question when we see business 1 don't have lah. Business 2 don't have. Both also profitable. Okay. Now of course after donation then, so after the loss then you have donation. Now do you have donation here? When you read the question, got donation or not? Now there's only donation that they have here is to the library. But the one you adjusted in your tax com just now under section 34. That means there's no donation, right? So in that case, the aggregate is your total, and total become chargeable 2580. Okay. Now, so that's how corporate tax is going to be. So your exam also more or less is like that, but maybe on a different area. So that's why tax is a paper that you can't study one chapter and go for exam. We test you everything. So that's why end of the day you must have all the knowledge combined. Then you can attempt the paper. That's why you cannot do pass here at the beginning. So all the while I never touch exam question with you because you have to come here. When you finish a lot, then only you can do. Follow? Alright, now this is to do with A, 23 marks. Okay? Now we're going to move on and look at B. Now what they ask us in B is they say, explain your treatment for the item. Now, when we ask you for treatment, we are not asking you whether it's taxable or deductible or what. That is what you are doing. We are asking you why. So when you say something is taxable, why? So that's what we are asking. Follow up. So that's why we find that here, the sale of mineral water to China is taxable because. Why is it taxable? They are goods manufactured in Malaysia. So all the sales arising from exporting overseas are deemed to be Malaysia derived. Now we are looking for the keyword. Okay. Now the keyword is you have to use the keyword that produced in Malaysia and that is Malaysia derived. And anything else you write also we won't accept it because there's no other point. That's the only reason. Hold on, okay? That's why these are things. My suggestion to you is you go through more of the past year and look at usually how examiner explain, and then you try to copy the style. Okay, right? So this is note 1. Okay, number 2. They ask you to explain note number 4. So So what's note number 4? Now that's EPF. Okay, EPF is easy lah. Now the law specifically allows a deduction up to maximum 19% of the deductible remuneration. Now anything that if it's in section 34, section 39, you just use the word specifically. The law specifically allows us, the law specifically disallows us. Okay? So hence the maximum deduction for the EPF on MD's pay would be, so just now we calculated 57. Consequently, the excess of $6,000 would be disallowed. Okay, now that is note 4. Okay, then they ask you to explain note 6 number 1. So what's note 6 number 1? Now note 6 number 1 is the gift. Okay. Now gift of broadband to employee are part of staff costs. Okay. So anything for worker, you just say it's part of staff costs, which are incurred in ordinary running of business. These are common expense that is part and parcel of running business. So we just use the word ordinary running of business. Like you need worker, okay? For example, electric. I ask you electric. Why electric can be done? Because you need to do business, you need to have power, you must have water. So it's ordinary running of business. That's the phrase we use. Okay? So these are ordinary running of business. So deduction is allowed as part of the trade expense. So it's just part of your trade expense. Okay, number 4, they ask you note 7.1. What is note 7.1? That is the international standardization activities. Now it's allowed by section 34. So what you do is you just look at what is this, you just copy okay, that the participation expense in international standardization activity is specifically allowed by law. But go further since they mentioned about approved by the Department of Standards, so that's why you must add on as a condition, on condition that the participation is approved by the Department of Standard, Malaysia. Okay, right. The last one they want us to explain is rental. So note 8. Now the rental income is foreign derived, and if remitted would be exempted from tax. Okay. Right. So this is how you do it. Now look at part C. Now they say explain two alternative treatments available for expenditure on provision of library. Now you know provision of library you can claim under section 34 or section 44, right? So section 34 is the one that we see just now. You claim up to maximum 100, and 44 is you claim up to maximum 20. Can see or not? Now, but if you only say that one is you claim up to maximum 100 and one is maximum 20, of course your answer is not right. Okay. Now you must tell me where do you claim. The important is where do you claim. So the 100,000, where do you claim? Where do you claim the 100,000? Huh? Where? After the adjusted, before the statutory. 好像怪怪哦。After PBT, before adjusted, is after gross income. Okay, after gross, before the adjusted. Now, so it's actually to claim as a deduction under business gross income in arriving at adjusted income, but subject to maximum of 100,000. And donation can be cash or kind, or to claim as approved donation with the deduction against aggregate income in arriving at total income, but restricted to maximum 20,000. And then donation shall be in cash only. Okay, that's the alternative treatment. So must write like that to be clearer. Okay. Right. Okay, we just turn to page 40. Okay, do a short one, then we take a break. Page 40. Right, we have questions on tax resident. Okay. Okay, now the requirement asks us in page 40, question 3, Encik Rahim. Okay, The requirement asks us in part A, number 1. Say, identify the temporary absence from Malaysia in the above scenario. Explain whether the temporary absent is permitted absent. So do you think that this is permitted? Yes or no? Number 2. Working to the exact number of days, determine for each of the year from 2003 to 2008 inclusive, whether Rahim is a resident. And if so, explain why. Okay, that means you only explain if Rahim is a resident. That's why the question say what? If so, explain why. If he's not a resident, you don't need to explain. Because the question just say explain if he is. Now describe the tax principles that determine the extent to which Rahim's income is deemed to be derived from Malaysia. So which principles will apply to him? Now that's derivation. Okay, B is on tax admin. We have not come to this, so I can't do this with you. They're asking you what's the difference between B form and B form. Those who work in tax line will know the difference. Okay, then they ask you what's the date of the submission and what's the method and timing of payment of tax. Now all this is we're going to cover when we do admin. Okay, we see part A only. Now Rahim Abdullah, who had previously always lived in Malaysia, returned to Malaysia on 1st July 2003, having stayed in England throughout the past 4 years. Rahim commenced employment with a Hong Kong company in September 2003, overseeing his employer's operation in Hong Kong and Malaysia. So Rahim's record of stays in Malaysia from 2003 to 2008 is as follows. Okay, so 2003, let's see, how many days? 87. Okay, 2004, 186. 2005, 50. 2006, 200. 2007, 10 days. 2008, 99 days. Okay. Note, in 2004, from 15th of June to 18th of June, both dates inclusive, Rahim in New York to visit his sister who was undergoing medical treatment. So is this permitted temporary absence? Yes or no? Yes, right? What reason that you're going to use as a temporary absence? Social visit, right? Now you can't use medical treatment, right? Why? Because ill health must be for immediate family, and sister is not immediate family, right? So I think in this case you probably must explain that in the answer, because if not, why examiner purposely mention medical and sister? So you touch on the point as well. Okay. Now then, from 30th of December 05 to 5th of January 06, and both dates inclusive, Rahim was in China to attend a seminar. So is this temporary absent? Yes. Okay, so attend a seminar. Alright, now, so first of all, 3A, number 1. Now the first part of the social visit is to do with 2004. Now yes, it is permitted temporary absent due to social visit, that it does not exceed 14 days in aggregate. Now you need to know that social visit got a limit. Oh? So how many days we have here? 15, 16, 17, 18. So it's only 4 days. Now, Rahim can't apply temporary absence rule associated with ill health since sister does not fall within scope of immediate family member. Then the second one is 2005 and 6. There again, yes, the visit to attend seminar, conference or study abroad is permitted as temporary absence. Okay, so it's that simple, whether you agree, yes or no. Okay, so now we're going to work out in part A number 2. First the status and then the reason why is he a resident. Now remember I've told you all the working that you do it. Now we put down the year of assessment and then you put down all the 4 section, A, B, C, D, and then whether Rahim is resident or not. Three, 4, 5, 6, 7, 8. So 3, 4, 5, 6, 7, 8. Now 2003, 87 day. You tell me, A can or not? No, right? Cannot, right? Okay. B. Now you're gonna use B if you're gonna use link 2. Yes, link to 2004. Now is 2003 and 2004 connected? Physically they are already connected, right? Because 31st December you're here, and then 1st January also you're here, so they're already connected, right? After they're connected, then you notice there's a gap, then only there's another 20 days. Now if this gap is temporary absent, then you got no problem. If it's not a temporary absent, then you cannot be already. So is this temporary absent? Yes, we just evaluated just now. We say yes, this is temporary. Then it'll be 166 plus 4 plus 20. So you already have the 182 consecutive days. So you're resident here. 2004 is very obvious, right? 186 days. So A, yes. Right, 2005, you're there for 50 days. And the 50 days is towards the end of the year. And then there's the gap. And why is there a gap? Because 5 to 6, he went and attended a seminar, correct? Okay, so 5 to 6 is to attend a seminar. So, and then we say that the attend a seminar is a temporary absence. So in that case, 5 is connected to 2006, right? Do they have 182 consecutive days? It's very obvious that it's 200 days here, right? So in that case, 2005, you're resident by virtue of 1B. 2006, can I use A? Yes, 200 days. 2007, just 10 days. A can or not? Cannot. B leh? Cannot, right? C leh? Cannot, right? D? Now D you have to wait first, right? Because you need to see last 3 year and the following year. Okay. So 2008, 99 days you fail A. B leh?
2004是好，那186不是 consecutive， 那就可以1A。
182天罢了嘛。1A you just need 182 day. 182 day period or periods. You don't need to have consecutive. The consecutive is 1B. You mix up already. Okay, go back and revise. 开始乱了，不用紧，现在乱还很早。Now 2008 71B, you can't use it. There's no rule here. Now 71C. Now first of all, you must have how many days? 90. This is 90 days, and you must have 3 out of 4, right? So the 3 out of 4, you have it. These are the 4. 1, 2, 3, 4. Now this year you still not yet decided, and it's only 10 days. But anyway, the last 3 years here you already are, right? So you become a resident. So this become a resident. Okay. Right, so that's your status. So you have a resident for all the year. Okay, now what we're going to do now is we're going to explain. Okay. Okay, Y03, you're a resident because the stay in 03 was linked to 04 with 182 consecutive days, where the use of permitted temporary absent was applied to form the 182 consecutive days period. Now Y04, Rahim was in Malaysia for 186 days, which fulfill the requirement of at least 182 days in Malaysia. Now, so you write like that, then you become very safe. You just have to say that you fulfill at least 182 and you have 186. That means you apply to the case study. Okay, Y05 again. Rahim's stay in 05 was linked to 06, but with the use of permitted temporary absent. The link itself is with the use of permitted temporary absent, and that the period in Malaysia in 06 had 182 consecutive days. Now why 06 again? Rahim stayed for 200 days, fulfill the requirement of at least 182 days in Malaysia. Okay, that means Y07. Now Y07, he was resident for all the 3YA immediately preceding to Y07, and been a resident for YA08 as well. Thus would be deemed resident for 07. Okay, so you just mentioned that you resident for that last 3 years and the following year. And Y08, he was in Malaysia in 08 for at least 90 days. Now, the actual is 99 days. Okay, and then for any 3 out of 4 year of assessment immediately preceding to Y08, he was either a resident or be in Malaysia for at least 90 days. He was resident for YA. Sorry, let me just check. 4, 5, 6. 4, 5, 6. Okay, Alright, so that's part number 2. Okay, so what's the principles that apply for his employment income? Now we notice that he will go to Hong Kong and then he will also be in Malaysia, so we can explain all the 3 provisions. So you can talk about 13.2a, 2b and 2c. Alright? So 13.2a is where your employment is exercised in Malaysia, your employment income is Malaysia derived. Now 13.2b is for your leave pay. Okay? And 13.2c is when you work outside Malaysia, duty incidental to employment in Malaysia. So you just have to explain the 3 things only. Just mention the 3 laws, then you will cover answer to number 3. Follow? Okay? Right, so this is what we do here for part 3A. Now B we won't discuss. Alright? So that's a question on resident status. Okay, done already. We take a short break. Come back, then we'll see personal tax question.